Hey folks, David Frost, mystrategicforecast.com. You're here for another episode of Common Sense Market Analysis, Monday, September 22, 2014. You're looking at a daily chart of the SPY, and what a shocker, once again, we had a down day. And nobody should be surprised because last week I told you that today, really between today and tomorrow, I think it happens tonight, is the Fall Equinox. And markets tend to turn around the equinox. Whether they're going up or down, they tend to turn. So everybody who was listening to these videos should have been expecting a turn. And I think there should be some more downside to be had. But let's take a look at what we've got. Right now, this double bottom is going to act as a fair level of support. Now, if we take a Fibonacci retracement, which will help us, identify some targets, okay? So we take the low to the high. Okay. Now, over here, we really never came below, we'll call it was around the 25% retracement or this pivot high. Either way, we never really broke below that. So we never got to the 382 retracement. Now, since we're so close to the 382, while I think this would provide some level of support, if we got down below this low here, okay, I don't think we're going to stop at the 382 because we're so close to it right now. I think we actually would go to around the 618, which is the most popular retracement there is, and we'll call it 195. So if we don't hold, if the market doesn't hold 195, then we're going to come down to this double bottom here. But first, we have to see if we can get through this 195, and we may not be able to. It's the jury's still out. We have to see how we come into it. We have to see what kind of velocity we come into it with, volume, all those things. So we'll take it one day at a time. We'll let the market tell us what to do, as we always do. Let me get this out of here. Okay. So basically, that's it. That's our S&P look. It's until further notice, it looks like more downside, but we've got levels to get through. We got to step, we got to stair step down. First is this level. You're going to have a little bit of support at the 50-day. Okay, you're going to have 50% retracement, and then you're going to have this 618 down at 195, and that's kind of the targets. Okay, let's move on. Let's talk about the IWM real quick because it's a different picture. It's a real weak index as compared to the S&P. And if you're going to short something, you pick on the weak fella and you short that one. However, this one sold off pretty good, and it looks like we're destined for this double bottom area here, about 110, 110.50. If we hit the double bottom, you'll probably pierce it a little bit, maybe even 195, 109.75. All those numbers are possible. I would call it 110, give or take. You're going to have a good level of support there, but if that doesn't hold, then it's down here at 108. So that's where we stand in the IWM. It's been real weak on good volume. Last 2 days have been heavy volume, heavy selling. And by the way, that's not to be over or undershadowed by the NASDAQ composite. You also had good selling in the NASDAQ. So the two growth indexes, the high-tech / growth index, biotech, small business in America, IWM, small caps, all these are the leaders in the market up and the leaders down. So these are leading us down. So it just tells me the evidence says there should be more downside. But when you look at the Dow was like, it wasn't off much today. It was off 100 points, 107. But there were plenty of Dow stocks up because money moves into those stodgy names that don't move that much, and they try and hide over there. Some of the money managers, they hide in the big names, the Coca-Colas, the Altrias, that kind of stuff. So, jury's still out. There's still a lot of disconnect going on in the market. It's not an all-down scenario, like a 90% down day. We didn't have one of those. So we'll have to play it by ear and see what tomorrow brings. All right, so what do we want to look at next? How about we swing over to gold? Okay, so gold is getting close to a potential bounce. Okay, so we kind of started a little one today. It failed. We'll see what happens. Let's take a look at an intraday chart. It's real sloppy, but that's what happens when maybe bottoms are being put in. So we're gap down, we move up, we fail, we come back down, consolidate a while, come back down a little bit. If this stayed above this level here, I would say that there were higher prices immediately, maybe to this gap window over here. At 117.50, but kind of dipped down a little bit, and this looks like it wants to go down a little more tomorrow. We'll see what happens, but we should be carving out something of a bottom. We'll see what happens. I would watch the 1200 area in the actual price of gold, the commodity itself, and other than that, I would expect a bounce in gold. Let's move on and let's go over to the GDX. We haven't talked about that one in a while since I think we briefly mentioned it late last week. We had the failed inverse head and shoulders pattern from the weekly chart. That's daily. The weekly chart, okay? And now we're coming down, and we look like we can get maybe down. First we're at this double bottom here, and then there's this bottom here, and then there's a bigger bottom right here on the weekly basis. This is a huge number. I don't know if we get down there. I'm thinking that, certainly if the price of gold rallies, I think GDX will follow, but this is a high-risk trade. So we're probably getting close. Folks can probably take a trade here, but your worst-case stop-out is below this low. So 2025, a close below that, and you've got to be out. But that's up to you. That's a little bit of a wide margin for me. I'm not ready to take a trade where the risk reward isn't in our favor. There's really no pattern here to take other than I think gold may be bottoming, but that's not a good enough reason to jump into a GDX trade, right? So you have to see the logic behind that. Until I see a signal that there's higher prices ahead, there's no reason to risk the capital. So I don't see that here, certainly on a weekly basis. Let's go back and take a look at a daily. It's coming. Okay. There's no reason to take a trade here. There's nothing that tells me higher prices ahead. There's nothing that tells me we can't pierce through this tomorrow and continue going. So until I see evidence that there's a trade to be had, then we're going to leave it be. But, however, okay, when that does occur, let's just say that another dollar lower or something, GDX bounces, okay? You can go back up to this area here where you had a lot of consolidation for several days, for about a week, up in the 24 area. You can go up there pretty rapidly. This is very oversold on volume. So there's probably a lot of short sellers in here, and there's going to get a point where there's exhaustion selling. And once that occurs, there's no more sellers. So what's left? Buyers. So when there's some buyers and no sellers, you're going to get a bounce, and you're probably going to get a quick bounce. It's going to be probably rapid up to 24, 23, 24. We'll see what happens in that. But, all right, we'll keep our eye on that one. Oil. Oil continues lower. Okay, nobody should be surprised. I think oil has lower prices ahead. Okay, let's take a look at the weekly chart, weekly chart. Okay, in my mind, you can actually get down to this double bottom here, call it 33 to 32.75. That's a long way from here in the USO. It doesn't move all that much. But certainly there's 33.50 on the horizon, and I think that could happen within the next day or so. If we get a nice dip in the price of crude, your price is around, what is it right now? 90, almost 91, 90.93 as we speak. And I think that 90 is in the cards, I think tomorrow. And we'll take it from there. But I think you're going to find the price of crude $85, give or take $1, short order. So that's my take in crude oil. So I've been pretty consistent on that. So we'll stay with that call. What else do I want to talk about? Anything? Some of the stocks were crushed today. You had some of the social network stocks crushed. You had some energy stocks that were under pressure. That comes with oil. just give or take, it wasn't one of those flush it down days. And until we see one of those, you can't even call a bottom. But there's just the market is just it's resilient. There's a bid underneath this market, even though we had a nice down day today. It's pretty apparent there's a bid underneath this market at the end of the day today. Buy program kicked in and held the market up. So we'll see how it goes over the next day or so. Stay tuned day by day. We'll watch the markets and let you know exactly what's going on. I'm David Frost, mystrategicforecast.com. Thanks for tuning in, folks.